markets recovered from geopolitical tensions as the crude prices corrected amidst easing of US-Iran tensions and positive global sentiments. Global stock markets recovered as US and Iran backed away from the edge of conflict in Middle East. The Q3 FY20 result season started with a bang in domestic markets. IT major Infosys announced a good set of results. On consolidated basis, Infosys reported 10.9% rise in net profit to rupees 4,457 crores on 2% increase in revenues to rupees 23,092 crores. Infosys reported 40.8% YOY growth in constant currency terms in high margin digital segment, which now contributes 40.6% of the revenue. Large deal signings stood at $1.8 billion. 14 large deals were won during the quarter, out of which around 5 were new wins. Total deal TCV reached $7.4 billion. More importantly, the company raised its FY20 revenue guidance to 10 to 10.5% from 9 to 10% earlier, and a clean chit has been given to the management in the whistleblower case. This week, Wipro and HCL Tech would report their Q3 FY20 results on Jan 14 and 17 respectively, while HDFC Bank would report Q3 results on Jan 18. Macroeconomic data, namely CPI and WPI inflation for the month of December 2019 would be reported this week on Jan 13th and 14th respectively. Industrial production grew 1.8% in November 2019 against the contraction of 3.8% in October 2018. For this week, we have identified DCB Bank as our pick of the week. DCB Bank is a modern, emerging, new generation private sector bank based in Mumbai with presence across retail, MSME, agri and corporate banking, serving mainly towards self-employed clients. Mr. Murli Natarajan, the current MD and CEO since 2019, has driven structural changes in the bank. As on March 2019, the bank had a network of 333 branches and 504 ATMs. The bank has niche focus in mortgage financing with granular loan book. DCB Bank has created niche in mortgage financing with approximately 40% of the total advances and emphasis on small ticket loans with ticket size of approximately 30 to 35 lakhs to self-employed in Tier 2 and Tier 3, Tier 4 cities. Bank's core target segment is MSME and SME with customer profile largely including self-employed small businessmen. It has deliberately chosen to have limited presence in salaried segment on account of significantly higher competition from large banks. The portfolio is well diversified and granular with greater reliance on secured lending, which contributes approximately 96% of the total loan book. DCB Bank would benefit from operating leverage post-expansion, which would drive ROA. Post-aggressive branch expansion of doubling its branch count from FY15 onwards, operating leverage has kicked in and DCB Bank has been able to bring in gradual and continuous reduction in cost to income ratio to approximately 58% in FY19. We expect cost benefits to sustain in long run, supporting improvements in ROAs. We have positive outlook on DCB Bank on back of its conservative approach, stable margins and cost controls. DCB Bank has transformed itself into strong retail franchisee over past years with focus on secured and granular business. It has done a successful shift from consolidation to growth and investment. DCB Bank chose to create a niche in self-employed segment, which has relatively limited competition, enabling the bank to improve its net interest margin significantly. We believe DCB Bank's comparatively conservative approach towards lending would help the bank tide over the current loan growth slowdown and slippages concern in near term. We hence have a recommendation to buy DCB Bank with target price of Rs 213. Thank you.